Welcome back. It's been a huge week for Netflix. The shares are up nearly 14% to almost $1,000 a share. They now have 300 million global subscribers, 302 actually, we learned in their latest earnings report. That's in the fourth quarter. My next guest, though, thinks these shares are going to climb much higher from here. He just raised his price target to nearly $1,500 a share, and that's if they don't split. Joining me now is Barton Crockett, senior research analyst covering internet and media stocks at Rosenblatt. Barton, did you literally go from 680 to 1,500 here? Welcome.
Yeah, thank you, and welcome. Yes, look, we obviously missed the 2024 run. We had been thinking that there'd be a paid sharing kind of give back, and that hasn't developed. Instead, what's happened is that their content has strengthened, and that became apparent in the fourth quarter. And we had to kind of move with the data and move with what's happening. And these guys are executing extraordinarily well. And while 2024 is behind us, we do think that there's a great setup for more good things out of Netflix's stock this year.
I know that people will talk about Squid Games and whatnot. I'm honestly, we're more of a sports household. So for me, I just wonder how much more runway. It seems like a lot of runway they could have. They've just begun dabbling with the NFL. They had the biggest quarter for subscriber growth they've ever had last quarter. And crazily enough, for a company of this size, 414 billion market cap, it feels like as they build out that docket that they could just keep going and keep gaining share.
Yes, that's, I think, especially really compelling what they're doing in sports. They seem to be doing sports better than anyone else in the game, and they've just started. They were able to put on, WWE Raw on Monday night and brag about twice the audience of what that had on TV. Their NFL Christmas Day game audience in the U.S. was not that really better than on TV domestically, but globally it was. And they did this Tyson Paul spectacle, and I call it a spectacle. If you can get more people to stream a sporting event, and that's the event, the sky's the limit. You can find spectacles, I think, again, and get big audiences again. So they're going after sports as a driver of events rather than a full season. That seems smarter. It seems more profitable. Yeah. Their margins are growing even as they're doing it. And sports is the main kind of support for the pay TV bundle. And if they're able to encroach on that meaningfully, which it looks like they can, I think there's a lot more share shift opportunity globally, not just domestically, for these guys.
I was looking at the Nielsen viewership numbers, the market share numbers for December. You'd have to take Hulu, Disney Plus, Paramount Plus, Peacock, and Max, all five of those, Barton, just to get more of a market share than Netflix had. What are those five companies going to do?
Yeah, I think that it's tough. It is very tough. I think that the media sector is setting up for consolidation. You see that out of Warner Brothers, announcements of hiring advisors with the restructuring of divisions. You see, obviously, Comcast spinning off some networks looking at consolidation. And that has to happen. They have to consolidate to have a place at the table. And even then, it's not assured because Netflix is running away with it. They're big, they're scaled. Amazon is big and scaled and investing very successfully. Google is a player in this game. It seems to be an area that's being disrupted, and the legacy players have a really difficult challenge.
And they have a lot of debt.
Yeah, debt is not your friend if you need to spend to stay in the game. We'll have to work through that, I think, particularly with Warner Brothers. That's driving, a lot of the discussion there. I think Paramount's found a billionaire friend that'll mean that debt's not an issue. And I think you're not going to have much leverage on the Comcast network spun out. But it's one of the factors to think about. Debt's not a problem for Netflix. It's not a problem for Amazon. It's not a problem for Google.